Every time I tried to pay with my Visa or Mastercard, I was told that I was going to have to pay 5 to 8% extra on top of the transaction. So I don't think that stablecoins is going to be what kills the card networks. I think it forces them to evolve. It's not just about whether the end user wants it or whether the merchant wants it. You have to find these use cases where it makes sense, both for the end user and for the merchant. And that might not be in all payments, but it makes sense for me when I travel to Africa and I get charged 10%. It also makes sense if I'm in a nightclub in New York and my card fails because I'm spending too much money on bottles of wine.
Hey everyone, welcome to another episode of Wrap Up Podcast. Today I have Jess from WalletConnect. Jess, welcome to the show.
Hi, Sam. Thank you very much for having me. Super excited.
Likewise, Jess, for the people who are unfamiliar with WalletConnect Pay, could you briefly introduce yourself and tell us what you guys are building and what problems you're solving?
So, WalletConnect is a network that has been around since 2018 to connect apps and wallets. On one side of the network, we have about 700 different wallets, which collectively give us access to about 800 million end users. So, most people
Oh,
who've got crypto in a wallet are able to use the WalletConnect network. And on the
right.
other hand, we have applications. We have about 80,000 applications. They include games, NFT marketplaces, payments companies, and many others. And last year, the network moved about $400 billion of value. The
Wow.
other thing that happened last year was we noticed a lot of payments companies starting to use our technology to
Okay.
enable people to make payments. But some of them were really struggling. They maybe didn't
All
have
right.
the crypto expertise to be able to do that. So we
Yeah.
started to build a product called WalletConnect Pay on top of our network, which is a full service offering for payments companies so they can accept crypto payments, but they don't have to think about the crypto element of it. They just get dollars, euros, whatever fiat currency they want
I
out at the
see.
back end. It's a cheaper offering for merchants, has a ton of benefits, and it also gives a really nice end user experience that feels much more like a payment than a crypto transaction. And we think that
I
that's really
see.
important too.
I see. So basically, you have two products. I thought Wallet Connect and Wallet Connect Pay were the same thing, but those are two different things, right?
Then,
So, yeah,
yeah,
yeah. Please go
so
ahead.
we have a whole host of different products at Wallet Connect. So we have the core network, which is what I mentioned about these wallets. On
Yeah.
top of that, we have Wallet Connect Pay. We also have a product for developers called Reown. We have some data products for wallets so that they can understand their users. So it's really thinking of us as a network, and then we can build different things on top of it. The one I'm really excited about right now is definitely Wallet Connect Pay. Obviously,
I see.
stablecoins, payments are very much, the zeitgeist right now that everyone's talking about. And I think, well, we're going to see
Absolutely.
a lot of growth over the next couple of years.
Yeah. Just, I see so many options for merchants at the moment, like cards, now stablecoin payment rails, bank to bank. And if you talk about local payment, there are tons of them, especially in Europe. So when choosing the payment provider or the rail, what should merchants pay attention to since they have so many options?
So I think this is really about meeting both merchant requirements and end user requirements. And I'll give you an
Okay.
example there. You have something like the UK open banking rails,
Yeah.
which are really great for merchants. They are very low cost, very easy. But the adoption rate is really, really low because there's very little incentive for an end user to start to use that as a payment method when they're so
Okay.
used to their card payment method, for example.
Right.
So this is why we've really focused on thinking about both the end user incentives as well as the merchant incentives. So Wallet Connect Pay as a payment method is cheaper for merchants. It provides much faster settlement. We can do same hour, same day settlement to merchants, which
Okay.
is really great for their working capital.
Right.
It's global. Um, at the same time, though, we really try to think about the end user. What makes the end user decide to pay with crypto instead of decide to pay with their Visa or their Mastercard or any other payment method?
Yeah.
And here we think the incentives are really important. So Wallet Connect Pay is designed with cashback for end users.
Okay.
We have a bunch of partners who provide additional incentives. So if you pay on a specific chain, you get some extra cash back or you get extra discounts, extra loyalty points. So we've really tried to think about this as a global payment method, but with incentives deeply built into it because changing consumer behavior is just really hard.
Right. No, you gave a good example of open banking in the UK, and you said for merchants there is no incentive. But don't you think the incentive is that they don't have to pay for the card networks?
No, no,
The,
no. I said that for
yeah.
the merchant there's loads of incentive, but for
All
the
right.
end user there's
All
no
right.
incentive.
Yeah. Okay. Okay. I see. You also mentioned stable coins. If we talk about stable coins, what are the incentives for like both merchants and the end user? What do you think?
So for the merchant, stablecoins or crypto provide lower cost payment methods, much, much cheaper than accepting a card. We can provide same day, same hour settlement. So you're not waiting T plus one, T plus two, T plus 30 if you're in Brazil to get your funds.
Right.
Um, this has a big impact on your working capital and therefore your kind of costs. Um,
Right.
it's very global. So one of the interesting use cases that we've seen for crypto payments is in airports where there's a lot of international travelers. People arrive, they don't have the local payment method, um, and people with any crypto wallet can then make a payment. That was done in Japan recently in Hokkaido. So there's all these different use cases about opening up to different buyer groups. Sometimes people like crypto payments because it's much better approval rates, much lower
Okay.
fraud, because the payment is being cryptographically signed by the wallet. The incident of
Right.
fraud is much lower. So these typically tend to be the main reasons that merchants are interested. For the end user, it can be a range of things. Ease, because I know that I can use my crypto anywhere. The second thing is that many users, as they're traveling, they get hit also by bad FX rates from their cards, for example. Whereas
Okay.
using USDC anywhere in the world is not going to hit you with a big FX rate. Um, and then this is where the important thing with WalletConnect Pay as a crypto payment method, rather than just paying with any crypto, is important.
Yeah.
Is we give you a lot of security because of the way that we design the system. All of the transactions are screened. We've onboarded the merchant, so you get this feeling of trust when you see the WalletConnect Pay sign.
Yeah.
You know that you can use any wallet. You're not connecting your wallet into somewhere that is not safe. And then secondly, we build in all of these incentives. So I know if I'm using Wallet Connect Pay, I'm going to get 2% cash back. I might get some extra
Okay.
discounts. I might get extra cash back if I pay on a particular chain or with a particular stable coin. So we've also built in real user incentives that make it interesting for them to start to pay with Wallet Connect Pay.
Right. Well, there are so many incentives, as you mentioned, for both merchants and, let's say, end users to use stablecoins. But I recently read an article by McKinsey, and they say the volume of stablecoin payments are growing. Yes, it's like $360 billion, and it doubled in the last year, but it still is like a very tiny bit of like overall global transactions. Why is this the use case? Why don't we see the scale yet?
I think there's been a few things. Firstly, I think that the regulatory landscape has put a bit of a hold on some people adopting this. We've seen a big
Okay.
change since the Genius Act came in. People are more excited, more comfortable, ready to launch things into production, which 2 years ago just wasn't the case. Everybody was very
All right.
worried about the regulatory landscape. The second thing is that from an end user experience, I think crypto payments still aren't where they need to be. If you
Mhm.
think about it, we're competing with existing payment methods, whether those are cards or APMs.
Right.
And the user experience for crypto is still not great. It's better than it was before. And that's a lot of the work that we've been doing with Wallet Connect Pay is transforming the user experience to be great with payments. I
All right.
just saw a wonderful demo from our research team on NFC, so I can just tap my phone to pay with crypto. We have changed the crypto signing experience, so you don't have to connect your wallet and then sign a transaction. You can just click pay. You
Okay.
can select the assets. We can sponsor the gas for you so you don't end up needing to have two different kinds of token in your wallet. So
All
there's
right.
all of these incremental user experience things that we've been working on over the last couple of years that I think are bringing Web3 payments experience much closer to Web2. And
Okay.
once the user experience is kind of the same, then it's easier to start moving people into using those payment methods, which 2 years ago just wasn't possible.
So basically, if I understand correctly, there are two things. One is regulation; it was not in place. Now we see that changing with the Genius Act, for example. And the second thing is user experience. It's still behind of a more traditional race, right? And I often hear that basically stable coins are like basically tubes or rails. And I just want to understand where do they stand against, let's say, already existing rails. And what I mean by this is that instant rails, including, for example, faster payments in the UK or RTP in the US, and a few others like in other regions of the world, PIX, for example. So why shouldn't merchants use those rails, and why should they switch to, for example, stable coins?
So I think there's two things. One, stablecoins are global. So I don't have
Okay.
to have a new payment method every country that I travel to, or when I make cross border payments, I don't get hit with really big fees. The second thing is that I don't really think of it as an either or. Um, yes, as a merchant, you don't want to offer probably every type of payment method.
Okay.
But if you want to be able to attract the most consumers, give them the best experience, adding stablecoins as an addition to all of those local payment methods and to a card network may make sense for you depending on who your end consumers are. It may not, but in a lot of places or a lot of segments, we see real pull from merchants. So some of
Okay.
those segments include like luxury and high end, where the average transaction value can be really high, even for a card payment. We see it in some segments where the card approval rates might be a bit lower, like in gaming, for example.
Yeah.
Crypto approval rates are very high because of the cryptographic mechanism that the wallet can use to sign that transaction.
Yeah.
And so that would be another motivation. And in other places of the world where people are holding a lot of stable coins, maybe because the local currency is very volatile. So they're
Mm.
holding USDC or USDT as a hedge against their local currency. They want to be able to pay with that. And so there's big demand for the merchant to be able to accept that. So it kind of depends on these different pockets around the world and different segments as to why the merchant may want to add this as a payment method.
I
But the
see.
beauty of WalletConnect Pay, the way that it's built and delivered to payments companies, is that if you work with a payments company that uses WalletConnect Pay as a merchant, you should just be able to enable this alongside all of the other payment methods. You get all of the reconciliation in the same way, you can get settled in the same way, but you're just opening up to a broader audience potentially.
So yes, here's the question. Are stablecoins really global? What I mean by this is let me walk you through the use case. I am originally from Uzbekistan, so very recently I moved to the UK. And in my country, we basically do not have any stablecoins just yet. I mean, and if I understand you correctly, you're basically saying that you can use any wallet, any crypto application, and register and start using um, uh, let's say stable coins. Is this the really the use case? Can I go on and register on any application? Are they allowed to onboard people from, let's say, not their regions, from any part of the world? So when people say stable coins are global, I remember this type of use cases where I myself actually am not able to use any stable coins, at least just yet, or I was not able to use in Uzbekistan, and I was trying to say, okay, how can I get access to it? Let's say in my country, there's nothing even about it. So is it really global?
I mean, I think it's certainly more global than a local payment method is. If
Okay.
I go to Brazil and I'm not on the Pix network, I have to download Pix and be able to use that as a local payment method. So
Okay.
when you think about stablecoins, a stablecoin, uh, aside from a country that has restricted the use of that stablecoin, there's no there's no difference between sending that stablecoin to the person in the next door room, the person in the next door city, or the person halfway around the world. The process
All
is
right.
the same, the technology is the same, the speed is the same, and the cost is the same, which is very
Okay.
different than, say, sending a bank transfer, which if I do it in the US to US is very cheap, but if I try and send funds from the US to Africa, it's very expensive and very slow. So
I will interrupt you here. Just sorry, I will interrupt you here. You gave a really good use case from US to US. And does it mean that in that case, I mean, stablecoins are for only emerging markets? Established markets, they already have, all the rails in place and prices are, quite cheap and acceptable.
again, I think it really depends on the use case. We see a
Okay.
lot of demand in emerging markets. It's definitely one of the biggest areas of growth for us. But I also think in some more developed markets, there is a real push for different types of payment method. The EU
Okay.
has recently been very forward about the fact that they want to reduce the reliance on US payment methods. And even in some developed markets, cards don't work everywhere, and
All right.
some APMs don't work everywhere. If you're buying a yacht for $500,000, you're not going to do that on a card or maybe even some of the other local payment methods. Crypto can be
Okay.
a really interesting and very cost effective payment method for you to do that. Same in luxury hospitality. We see a lot of demand in developed markets in the luxury hospitality space because maybe they're attracting a very international type of visitor. Maybe cards tend to get very low approval rates in some of those places. So
Okay.
um, it certainly, I wouldn't go so far as to say that like crypto is better than all payment methods in all cases. Um, but I think that crypto and stablecoins have uh, a really strong product market fit in many different geographies and in many different segments.
I see. I see. And I will challenge you one more time here, if you don't mind, because again, I will go back to the example of me moving to another country. But look, in my country, for example, banks offer Visa and Mastercard. I can basically use the same Visa and Mastercard here in the UK or at least at the airport. Why should I go and again use stablecoins? Because again, I already have my Visa or Mastercard in my hand. So how would let's say stablecoins compete against existing, card networks? Do you think those card networks will simply let, stable coins be used everywhere and even on their networks?
So I'll give you a counterexample, which is that I
Yeah.
spent 3 weeks in Africa in December.
Okay.
And every time I tried to pay with my Visa or Mastercard, I was told that I was going to have to pay 5 to 8% extra on top of the transaction. Um,
Okay.
this is a lot and would make me as an end consumer, if I can pay with a different payment method, cash, stable coins, and Pesa, I would always choose to do that because because I, as a consumer, actually get punished for using a card. So
Okay.
again, it's very geographic dependent. Um, the other thing is that whilst having a Visa or a Mastercard is great for you, it's not
Okay.
great for the merchant that sits at the back end that is paying very
Right.
high fees on that. If you're
Makes
doing a
sense.
cross-border transaction with a Visa or a Mastercard, you are gonna get hit with some FX, but the merchant is gonna be paying 1, 2, 3% on that transaction. If you're a small company, with low margins, this can be very, very meaningful for your bottom line. So if we can
Yeah.
give merchants the lower cost, that's also very interesting for them. This is why payments is always a two-sided thing. It's not just about
Yeah.
whether the end user wants it or whether the merchant wants it. You have to find these use cases where it makes sense both for the end user and for the merchant. And that might not
Right.
be in all payments, but it makes sense for me when I travel to Africa and I get charged 10%. It also makes sense if I'm in a nightclub in New York and my card fails because I'm spending too much money on bottles of wine. So there's these like use cases where for both the consumer and for the merchant, it makes a lot of sense.
Makes sense. No, thank you for explaining. That now makes sense. And I also see almost every second company launching their own stablecoin. Do we really need so many stablecoins? I mean, we already have two big players, USDC and USDT. Do we really need them?
The beauty of what we've built at WalletConnect Pay is that we
Yeah.
don't mind which asset you want to pay in. So you can pay
Okay.
in USDC or USDT. You can also pay in, Sam's stablecoin. Um,
Yeah.
as long as there's some liquidity, we can manage that on behalf of our merchants. We don't mind. And so as a business, I don't really mind how many stablecoins there are out there. I do
Okay.
think that there is some positive things about having innovation in the stablecoin space. Stablecoins that can give consumers yield, for example, I think are really interesting. Um,
Yeah.
that's much better because I, as an end consumer, get the benefit of that rather than passing that on to another company. So I think that there's still some innovation to take place in the stablecoin space. Will
All
we
right.
end up with millions and millions of stablecoins one day? I hope not. And I think that eventually we'll get back to a smaller number of really, really great ones. Maybe they have some different features that make one attractive in one place and one attractive in the other place. Um,
Yeah.
but I think right now it's great that there's some innovation in the stablecoin space because hopefully that delivers better things for consumers.
Where will card networks live in this whole equation? I mean, they disappear, let's say, in the future as the stable coins scale? Because again, merchants would prefer cheaper payment methods, or do you think they will all live alongside one another?
You know, the excuse me. The card networks have existed for a really long time, and there's been a lot of
Yeah.
challenges to them. And people say, "Oh, this new payment method is going to kill the card networks, etc." The card networks are really good at what they do, and they're really smart people there, and they're working on stable coins too. So I
Yeah.
don't think that stable coins is going to be what kills the card networks. I think it forces them to evolve. Maybe it brings pricing down for merchants. Maybe it forces the card networks to rethink and rebuild some of their technology. Um, but I think probably many different payment methods coexist for a long time next to each
Hmm.
other, including the
Hmm.
card networks, APMs, and crypto too.
Makes sense. And I also hear a lot that stable coins are basically payment rails for AI. Could you please explain in simple terms what does that mean?
Yes, I always challenge I challenge firstly that stable coins are great payment rails. Um, stable coins are really great settlement rails, but a
Okay.
payment is a lot more than a settlement.
Yeah.
Just being able to send value from one place to the other doesn't make it a payment. And regulation all around the world says that there's a whole other host of stuff that should go into making a payment. That includes things like sanction screening, travel rule compliance,
Yeah.
um, you know, and so firstly, I think we need to distinguish between settlement and payment. Settlement is a part of a
Okay.
payment, but there's a lot of other stuff that goes along with it as well.
Sure.
Um, so then the question is are stablecoins great in the use of AI? And I think that the answer is yes. Sometimes for
Okay.
some of the reasons that we've discussed already, they're low cost, super fast. You can send very, very small amounts very cost effectively. If I want to wire somebody 1 cent, the fees are going to eat the whole wire value. Whereas I can
Yeah.
very easily send somebody $1 cent of a stable coin and the costs aren't super prohibitive. So it allows us to make very, very small payments, which is great in an AI context. For example, if I'm using somebody's API, just using X402, I can make these micro payments really cost effectively. So I think stablecoins open up a lot of possibility for agents. I think that we've seen so far in this kind of experiment that we're running as a world around agents, a few challenges, which is do you just give the agent your wallet? Do you give them their own wallet? How do you
Yeah.
manage that? One of the things that we built recently at Wallet Connect was the Wallet Connect CLI so that you can
Okay.
connect your existing wallet via an agent, but you're still in charge. You still have to do the approvals. And this means that the agent can kind of act on your behalf, but not just spend all the money on your behalf. So
All
I think
right.
we're going to see a lot of evolution in terms of how agents, stablecoins, wallets all interact. But I think it's going to be a really important part of commerce in the future, um, with how people are going to buy things online.
Okay, what do you think how agents are going to change the commerce itself in general? We hear a lot that, let's say, AI goes and buys on behalf of you, but do you really want agents going and doing that for you?
I mean, I think I would love a world where I could say to an agent, hey, I have these 10 flights I need to take in the next 6 weeks. Can you find me the flight? And they come back and they say, these are the flights. And I say, yep, looks good. Go buy them. That would save me a lot of time.
Right.
And I would love to be able to buy things in that way. Maybe it's not every form of commerce. I still maybe
Okay.
wanna, like, go and browse to find my new handbag or whatever, and I'm
Right.
happy to do that purchase myself. But I think we can imagine a world where agents are gonna be buying a lot of things on our behalf.
I see. Basically, this would be my last question. So, when choosing service providers, just like yourselves, Wallet Connect, for example, what should merchants need to pay attention to? Since so much development happening basically every day, what are the top things they have to consider when choosing providers?
So, I would look firstly for a strong track record. Um, there are a lot of people building in this space who don't have deep experience, who are like jumping on the bandwagon of stable coins, and may not understand all of the complexities of both stable coins and payments.
Yeah.
We've really focused on that. A lot of my team have a deep payments background as well as a crypto background, which means that we
Yeah.
really put things like compliance and security at the forefront. And we have a track record because we move hundreds of billions of dollars of value every year on the network. So I
Yeah.
think that's number one. The second thing I think is like, how much work are you going to need to do as a merchant? And in the same way that like merchants don't go around and they build their own card networks or reimagine their own payment methods and have to do integrations themselves, they
True.
should have to deal with none of the complexity of this. The merchant shouldn't need to understand how crypto works in order to be able to use this as an effective payment method. It was an interesting conversation we had with a partner recently where they had tried another crypto payment method, but they were having to train all of their staff in store to understand crypto because the user experience was kind of challenging. So the way that, again, we've tried to design this is that people don't need to learn about crypto. You don't need to
Right.
train your staff in the shop to know what crypto is in order to be able to use this as a payment
Okay.
method. Um, and then the final thing I would say is like, look for optionality. Um, what you don't want to do, I think, is say, okay, we're only going to accept USDC on this one chain. Because chances are 99% of the people coming to your
Yeah.
store might have USDC on a different chain, or they might have a different asset completely.
Correct.
And so I think what you want to be able to do is to find a solution that gives you that optionality and that is going to continue to evolve. It's not provided by a particular chain or a particular asset. It's able to, when new assets come online, it can give you those out of the box. When a new chain
Right.
comes online, it's compatible with that. Because that's what's going to make this easy for you over the next 10 years. This space is going to change a lot. It's really going to evolve.
Absolutely.
And you want a provider that's going to evolve with you.
Right, makes sense. No, Jess, thank you for this interesting conversation. It was great to have you on the show.
Thanks very much, Sam.